Hey everyone, me Kevin here. Is hyperinflation going to crash the real estate market? Let's get right into that right after, of course, I mentioned this video is sponsored by Deal Machine. Go to meetkevin.com/deals, sign up for Deal Machine so you can get real estate deals off market before they hit the market. That's where the money is made. But folks, we know the real estate market is crazy right now. Real estate prices are up 20%. You've got stocks mostly up with the exception of like certain tech and consumer discretionary. You've got commodity prices up. We're seeing prices of everything going up, and it's because of the Fed's money printer. This is obviously leading people with assets and wealth to have more of it, which allows them to shop for more real estate. And we are seeing more than ever, more institutional buyers get into the rental real estate market game. More people buying houses directly from Open Door or Zillow Instant Offers, buying them from these companies as large entities, large landlord entities, taking those properties away from other home buyers. And this all creates more demand for real estate and drives up prices even more. So we know the market is maddening right now. We know that if you have a pre-approval letter and you're like, let's go shop for a home, darn it, there are none available. You got to be ready to strike and go on properties when they come up. But things feel a little euphoric right now. And this is where things get a little bit dangerous and where we have to get into a little bit of our warning. So here's the scoop. Right now, the market is on pins and needles waiting to see what actually happens with longer term inflation. We have most investors right now knowing that we have massive inflation happening right now. And we expect this inflation to continue due to supply shortages over the near term. The Federal Reserve takes the stance that don't worry, this is transitory. These issues are going to go away. We're not going to see these issues for the long term. Inflation will come down, will balance out around 2%, we'll slowly raise rates, 23, 24, and everything will be fine. Most folks, however, in the investing markets don't believe this. They're concerned that the Federal Reserve is going to lose control, that we're going to have hyperinflation. And then you know what? Mortgage rates are going to go through the roof and real estate prices are going to tank. Why? Because we already know that there is a clear link between mortgage rates and home prices or rental property prices or cap rates on commercial real estate. Quick, easy rule, it's the rule of 10x. For every 1% that mortgage interest rates increase, home prices or rental property prices go down 10%. So if you get a 0.5% increase in rates, prices tend to go down 5%. If you need a quick example of this actually happening in history, go to about May of 2018. What you're going to find is the Federal Reserve started raising interest rates to taper and put less quantitative easing into the markets, reduce. Market freaked out. Real estate prices fell instantaneously. Within a matter of a few weeks, we saw real estate prices tank 10 to 12%. They recovered by the end of the year, but only because the Fed started reversing course. And so what's the trajectory going forward? Well, first things first, here's what's on the Fed's mind. They're going to start talking about tapering. Now, I know that sounds convoluted, but this is the Fed basically saying we're considering maybe injecting less cash into the markets. The first target they'll likely look at is reducing their purchases of mortgage-backed securities. So here's what's happening right now. The Federal Reserve is buying $40 billion a month of mortgage-backed securities. When they stop buying these bonds, mortgage rates are going to go up. So a belief right now is if you want to get into real estate, you probably want to get into real estate before the taper. You can then lock in a 30-year fixed rate mortgage, but be prepared for some potential volatility because here's what's going to happen. We're going to go into a fork, and we have two ways that we can go. Path number one is the inflationary direction. By September or October, the taper may have already started getting priced in, mortgage rates might be higher, but the market's going to anxiously be looking for, are rates going to continue going up because inflation is staying, or is inflation trending down? This is going to determine whether or not we will actually have a real estate crash. So in the short term, I think if you're trying to buy now, you probably want to get in before the Fed actually starts talking about tapering mortgage-backed securities. So once that happens, I think mortgage rates are going to jump up a good chunk. 0.5% would not be unreasonable very, very quickly within a day. So you just want to lock in. Then, if you're thinking about buying after September, October, wait for September, October. Watch what happens in September, October, because that's when we're going to know, is inflation temporary? We're going to get through this nasty period of February to September and October where we're uncertain. We have high inflation, year over year inflationary numbers look really, really bad, really nasty. The market freaks out over it. If by September and October we get Q3 coming to a close in October. We start getting Q3 earnings reports. That means we have Q2 numbers, we have Q3 numbers, and we start getting a grasp on how are companies seeing inflation, what are company margins looking like, is inflation here to stay, is inflation starting to inflect downwards? If we start seeing an inflection to the downside, we might be at a place where we actually say the Fed was right. We didn't get big long-term inflation. If that fork happens, real estate prices could actually stay stable and potentially continue to trend in the direction they are. I don't think they'll trend at this 20% parabolic growth. It's not healthy, it's not sustainable, but we can level out and go back to that 4 or 5% natural growth of real estate prices as supply starts coming on the market again. Yeah, potentially evictions go through, foreclosures. That supply is needed right now. It's not saying I want anybody to get kicked out of their house or lose their house. We don't want that. But that could be something that helps soften this real estate madness to where we get back to sustainable price increases. Now, the dangerous fork is September, October, we start seeing inflation ramp up and not down. The short-term transitory nature of inflation we're expecting doesn't happen to be short-term. It happens to be long-term. It happens to be systemic. It lasts for 3, 4, 5 years. The Fed has to then raise rates much sooner than expected. That will force mortgage rates up even faster. So the taper is going to push rates up. The Fed freaking out pushes rates up. Real estate prices could literally collapse if the Fed had to raise rates, say 2%, 20% in the matter of a month. So if I was an owner of real estate now, or I was thinking about buying now, I would want to be prepared for that potential change in market value. The best way to be prepared for that is, well, not only by checking out my amazing programs linked down below and using that coupon code to get into the 0 to Millionaire real estate investing course or the do-it-yourself property management and rental renovations programs, but also by just mentally being prepared for volatility in the markets going forward. If rates go up and you're locked in on a 30-year fixed rate mortgage, it doesn't matter. Your payment doesn't change. Nobody can margin call you. You're not going to lose your house. Nothing's going to happen in that angle. If you have short-term variable rate financing, rates might change, and you should be prepared to have to start paying more on your mortgages. This is a risk factor. If you have a 30-year fixed rate mortgage, you don't have that issue. You can ride this out. If you're looking to buy after September, October, keep in mind that inflection point, is inflation here to stay or not, is going to affect real estate prices, because I think there are going to be a lot of folks that wait for that moment. And if all of a sudden inflation starts trending down, you can see a lot of people who were waiting to get into real estate, get into real estate. We start seeing inflation, prices are going to come down substantially. That doesn't necessarily mean it's going to be more affordable for you. It just means prices are going to be lower, but you're going to be paying a similar payment because those interest rates are going to be up. So you've got kind of this really weird market where here's what I'm doing right now as sort of a bottom line. I'm only buying properties if I can get them $100,000 under market value. I just last week closed on a property in California that is $100,000 under market value. I bought it for $579,000, actually $570,000 with closing costs is like $574 or whatever. It's going to be worth at least $710,000 when I'm done doing about a $30,000 to $40,000 renovation on it. So we're set. There's my $100,000 of market value. That's what I teach in my real estate investing courses, finding those deals. But do I really want to buy an at market value deal right now? Probably not. The only way I would do that is probably if I were buying new construction and I got a 30-year fixed rate mortgage. It's probably the only kind of property I would get right now, because then I wouldn't have to worry about renovating it. I could just rent it out right away, house hack it with room rentals, or just live in it and live out whatever fluctuations we get here in the short term. But otherwise, cap rates on multifamily, you're gonna be really sensitive to these changes because you usually get shorter term debt. And you've got some big changes potentially coming from the Biden administration with 1031 exchanges that are going to disproportionately affect properties above $1 million. So keep that in mind, especially rental properties. So lots to digest here. Hopefully that made sense to you. Let me know what you think. Big thing is, big bottom line, folks, September, October is going to be an inflection point. So let's pay attention to that. We'll see what happens. And go to mettkevin.com/deals to get with Deal Machine. Thanks so much for watching. We'll see you in the next one.